Want to bring in our next guest, Gerald Lanik, CEO of Bill Ford is here, and there is so much to talk to you about. The private equity landscape is potentially transforming. We're going to see over the next 4 years in a post-election world what that looks like. Obviously, I want to talk to you about TikTok as well and so much else. You're on the board of ByteDance. But just speak to the private equity piece of all of this, because I think there is a question mark for many. For the last couple of years, there's been a lot of stuff that's been bought, not a lot of stuff that's been sold in terms of fundraising and the like, which has made it difficult from U.S. pension funds and other things. There's been a sort of, a very difficult transaction environment.
Right.
And yet we do have these, we're talking about the public stock market. PEs are at record numbers.
Yeah. We've had the toughest exit environment that we've seen over the last 3 years for both the IPO market and the M&A market. And I think it's really the regulatory overhang that we had from the last administration really caused companies to hesitate about going public, despite a very strong equity market and a pretty good economy. But they held back. And I think that the same was true for the M&A market. And that's made exit conditions tough. And for the PE industry, in terms of getting capital back to our investors, it's been challenging. But I'm expecting a real renaissance in the IPO market. I think we're going to see a lot of companies line up to go public. We've got 28 companies actually in our pipeline ready to go. And now really
ready to go.
Yeah, ready and excited to go public, and I think they're going to give some great opportunities for public investors. And it's sort of a triple win. It's a win for private equity investors who have a chance to get liquidity. It's a win for companies who can raise capital, and it's a win for the public investors, because I think without IPOs, the public investor doesn't have a chance to participate in some of the most exciting growth companies.
What about on the buying side? And I ask because for a long time it's felt that the strategics can't buy anything because of the regulatory environment. If that opens up, all of a sudden, there's a period of time where private equity was competing with itself over assets because the strategic guys couldn't even do it.
Couldn't play, yeah.
And so does that make it harder for you?
I don't think so. I think about over 40 years, about 50% of our exits have been through the public market and 50% through the M&A market. And I think we'll go back to that kind of a situation where you have a lot of companies will choose to sell to strategic buyers because that market will open back up. And I think people will be access to public markets as well.
What's the fundraising environment look like? You have about $103 billion under management right now?
Yeah.
And the reason is this exit piece is an interesting one because of the U.S. pension funds, which are sort of tapped out at the moment. Middle East, it seems like it's better, but you tell me.
I think it's improving. I do think that investors are waiting to see some return of capital that's been held back by this difficult exit environment. As exits start to loosen up, I think you're going to see new commitments. And I think people still recognize the private market asset class as a place that can deliver excess return and attractive returns, but they're waiting to see things to improve.
You guys have spent a lot of time buying technology companies, and I want to talk about AI because there's a big question about sort of, A, where we are in this sort of cycle, and B, what the defensive mode is around any of these businesses if, in fact, AI actually is or gets to the promised land of where it claims it's going to be.
Yeah, I think you have to sort of step back and look at AI as a major tech cycle. And this is sort of the fifth major tech cycle of my career. There was the PC cycle of the 80s, the internet cycle of the 90s, the mobile cycle of the 2000s, the cloud cycle of the 2010s, and now here we have AI. And every time this happens, you see companies get disrupted, you see new opportunities created, but the opportunity set plays out over decades, not years. And I think we have to recognize we're still in the relatively early innings of AI. We don't know who all the winners and losers are going to be yet. But I do think this is going to have a profound impact on the technology
But are
sector.
you thinking of playing it from a software side? Are you thinking of playing from an infrastructure side, an energy side? What's the...
I think it's the whole stack. I mean, we have a digital infrastructure business that builds data centers around the world. They're going to benefit from the demand for data center capacity. I think if you look at the infrastructure layer that's getting laid down right now, software infrastructure and hardware infrastructure, that's happening too. That's a good opportunity. But as we go up the stack, we're going to see applications that we can't even imagine right now.